Picture this. It's February 2026. The opening bell on Wall Street rings, but you can barely hear it over the sheer panic. The entire market is in an absolute freefall.
And get this, in just the first few minutes of trading, $700 billion in market value just vanishes. It's a massive shockwave, and it's rattling every single major index at the exact same time.
Naturally, this sends the VIX index, Wall Street's fear gauge, completely through the roof, absolutely shattering records. But what's really scary is how this moment stacks up against history.
But here's the thing. This didn't come out of nowhere. We saw a preview of this back in August of 2024, when the VIX spiked to 66. That's a number we'd only seen during the 2008 financial crisis and the absolute peak of the COVID pandemic. So yeah, this wasn't some random event. It was a huge warning sign.
No, this isn't random at all. This is a collision. It's the climax of incredibly powerful forces that have been on a collision course for years, and that's what we're here to unpack.
So, what exactly are these forces that are driving all this chaos? Well, there are three of them, and they're all hitting at once, creating this, perfect storm. Let's break down the first one.
Force number one is, of course, artificial intelligence. Is it a supercycle for unbelievable growth, or is it a force of creative destruction ready to sabotage entire industries? Well, it's both.
You've got top analysts like JP Morgan's Dubravka Lakos-Bujas, who see AI as this massive engine for the economy. They're talking about it fueling record investment and profits, not just in tech, but across the board. Utilities, banks, even healthcare. So you've got this incredible split. On one side, the promise. AI is projected to drive S&P 500 earnings growth up by a stunning 13 to 15%. But then there's the peril, which is just as real. For every big winner, there's a legacy industry facing a brutal sell-off because investors are terrified they're about to be made obsolete.
I mean, want to see what that looks like? Just look at IBM. Their stock plunged 13.2% in a single day. Why? Because an AI firm announced a new tool that could automate a huge chunk of IBM's core business. That's the raw, disruptive power of AI in real time. And this whole thing isn't happening in a vacuum. It's slamming right into our second major force.
And that brings us to force number two, the new trade war. All around the world, we're seeing these protectionist walls being built higher and higher, and it's creating this fog of uncertainty for businesses everywhere.
And when you ask the experts about China's strategy in all this, it's not so simple. A huge majority, 65%, say it's a mix of both defense and offense. Sometimes they're reacting to moves from the US, but other times they're the ones pushing to gain an advantage.
Which, of course, leads to the big question. In this high-stakes game of economic chess, what is China's most powerful move? What's their ace in the hole?
The answer comes down to this one number, 92%. That is the share of rare earth mineral processing that China controls. We're talking about materials that are absolutely essential for everything from your smartphone to advanced military hardware. It gives them an unbelievable chokehold on global supply chains. And according to the expert consensus, China has used this weapon incredibly well. When Beijing threatened to cut off exports, it basically forced the world to come to the negotiating table. The final assessment is pretty clear. China played its hand perfectly.
So all this geopolitical tension just adds another layer of stress onto our third and final force, the incredibly fragile state of the global economy. The whole system is walking a tightrope, and there's just no safety net.
I mean, you can see the cracks in the foundation everywhere you look. Inflation just won't go away. It's stuck near 3%. Job growth is basically ground to a halt. Businesses are spooked because of those trade fears. And the central banks, they've just decided to sit on the sidelines, keeping rates high.
And look, this isn't just a vague feeling of uncertainty. It's a risk you can actually measure. JP Morgan puts the probability of a US and global recession in 2026 at 35%. Now, that's not a guarantee, but it is way too close for comfort. So what happens when you take these three forces, disruptive AI, a new trade war, and a super fragile economy, and you slam them all together? Well, you get a world that is deeply, fundamentally polarized. JP Morgan actually has a term for this. They call it multidimensional polarization. The best way to think about it is a K-shaped economy. Like the letter K, one arm shoots straight up for the winners, while the other arm angles sharply down for the losers. It's not just one split, it's happening everywhere, all at once. And this polarization is playing out across three key dimensions. First, you've got this massive divide between the AI-powered sectors and, well, everyone else. Second, you have an economy with tons of investment in tech, but really weak hiring.
And third, you have a growing chasm in spending between the wealthy and everybody else.
So with all this chaos and polarization as the backdrop, how are the experts seeing the year ahead? What does this all mean for trying to navigate the markets?
Well, JP Morgan's forecasts for the year-end paint a really fascinating picture. They're seeing the euro getting stronger, oil prices dropping down to about $58 a barrel, and treasury yields staying pretty high. But the real head-turner? It's gold. They're forecasting it to soar to over $4,700 an ounce, a classic sign that people are running for safety amid all this uncertainty.
And this quote from JP Morgan's Fabio Bossi really just says it all. The environment is fragile. It's a world where huge risk and incredible resilience are living side by side. The whole game is just figuring out how to navigate it.
And that leaves us with one final and I think crucial question. In a world that is literally being pulled apart by these powerful forces, where the winners and losers are separating faster than ever before, how do you find your own resilience?